The daily rolling cash bet is the most popular bet we offer for spread betting, and as it allows you to hold your positions overnight, they are mainly used for short-term trades. With daily rolling cash bets, if you hold your position after 10 p.m. UK time, we charge you a small interest fee on your long positions and pay you interest on your short ones. We charge our clients the London Interbank Offered Rate, or LIBOR, plus 3% for each day. If you add these together and divide by 365 days in the year, you can calculate the daily rate. If, however, you want to hold an equity spread bet for a longer period of time and you don't want to pay the interest fee on a daily basis, you might be better off using our quarterly spread bets. The spread is usually wider than for the daily rolling cash bet, but all of the daily financing is already built into the price at a discounted rate. In the examples so far, we've looked at UK shares, the UK 100 share index and the US 30. But that's only scratching the surface of the thousands of financial instruments you can trade on with us. So, what other instruments can you trade? Global equities, indices, sectors, commodities, foreign exchange and treasury bonds are available to you as our client. Let's start with global equities. They are traded on in exactly the same way as UK stocks, except that instead of the share price being quoted in pence, they are quoted in either dollars, euros or the relevant currency for that country's stock. This is an important consideration because it means that when you are trading in global equities, you must always be aware that in some cases your exposure might be higher than you at first thought. If Vodafone was quoted at 178.50 to 179, you would work your exposure out based on the full pence value of the stock, whereas with a US stock like Microsoft, you are betting on the cents movement and your exposure is the value of the share in cents times your bid. If Microsoft was trading at $33, to buy that would mean £3,300 total exposure if you were buying at £1 a point. I think you'll agree it's worth remembering that. Trading on indices makes up 57% of all the trading done through us. A stock market index is made up of all the shares listed on a particular stock exchange, and it could be said that they reflect investor sentiment on the state of that market's economy. The most heavily traded indices are the UK 100, the US 30, the SPX 500, the German 30 and the French 40. You can also trade on different market sectors such as the banking, mining and pharmaceutical sectors. Trading the sectors gives you the option of taking a wider view. It's like picking a basket of shares in a particular industry. Then there are commodities. Commodities can be more advanced than equities and could be where you really start to do more research. Like all of the other markets, your risks can be managed, but you have to be prepared to start learning about the commodity you're interested in trading and how the wider world can affect its price. If it's crops you're looking to trade, then you're having to be aware of weather, diseases and pests. Or if you're looking to trade oil, then factors like conflict in oil-producing countries or natural disasters can have an effect on its availability and therefore its price in the marketplace. Unlike some other markets, most of the commodities market is available 24 hours a day to trade, which, along with its relatively low entry costs for trading and its advantages in terms of being able to trade on margin, can make it an incredibly attractive trading option to look at in the future. There is another 24-hour market open to trade on through us, and that's foreign exchange. Foreign exchange, or FX, is possibly the most established of all the trading markets. They've been around as long as banks have been doing business, but it's only really been a relatively short time that they've been available to traders like yourself. Foreign exchange is the world's largest financial market and reacts faster than almost any other market to economic, political and social events as they occur around the world. With FX, you trade the fluctuation between pairs of global currencies. For example, pound sterling against the US dollar. The opportunities for speculation are immense, and as such, it's a market that is growing in popularity all the time. Trading IQ explains FX's workings in far greater detail, and like commodities, once you've started to get a taste for the marketplace, you'll soon realise that it can be one of the most exciting ways to trade with us. Treasury bonds are more complex than equities and index products, as their movements are more sensitive to interest rates and the cost of borrowing within the countries that they are issued in. They involve a little deeper research, and they can quite quickly become engaging to the right trader. We offer all of our clients the opportunity to attend seminars and workshops to help explain the principles of risk management, alongside courses exploring the different markets in depth. We know that the more you understand, the more you will enjoy trading. As a client of ours, all of that information is available on our website in the education section or at the end of the telephone with one of our educational advisors.